So it's Sunday, early part of the day in America, getting ready for football. My team has a bye weekend and they need it. They got a lot of players out, the Minnesota Vikings. Oh, the life of having to watch the Minnesota Vikings. It's interesting. A few things I wanted to talk about. Sunday, when the futures markets reopen, could get crazy. The Asian session and then through the EU session might be nuts, so be careful. Then we'll see what happens out of the U.S. session open. If the Asian session and the Euro session are all over the place, Monday, I might be super careful, not trade automated, even though, the automation did just fine on Friday, even though we had, news hit out of nowhere. It's just, when the markets are very emotionally reactive, which they could be. I don't think they will. I think things will stabilize overnight, probably really stabilize during the EU market period. And then as we get into the US Open, we'll probably get some wild swings that should be good to take advantage of. So just always, in other words, just be vigilant. And when markets get like really emotionally reactive, sometimes it's better to sit back and just wait for the markets to interact with like key levels or stabilize a bit, like maybe the first 15 minutes or 30 minutes of the day, and then turn on any automation. Now, I haven't like turned off or kept off automation a long time on anything since maybe Brexit back on FX stuff. But, you never know. And then the other thing on the crypto market side, see, if you're paying attention, a lot of people got just destroyed on the crypto side. The biggest reason why I've always stayed out of the crypto side, the spot market side, is first of all, I don't like markets that don't have market makers. So in futures markets, we have centralized exchange and market makers. In the stock market, we have market makers, and we have individual exchanges, NYSE, you have the Nasdaq, and so on. Uh, and then the other problem in crypto with no market makers and then people having the ability to cross margin their positions, you can have a liquidity vacuum when events hit that are non-standard. And that definitely was the case. What is some of these alt listings were down 50, 60, 70, sometimes 90%. That's a liquidity vacuum. So I've just never touched that realm. So, that's the problem with the crypto market to this day. If they could get it on centralized exchanges and then get in market makers that add liquidity and stability between the, up and down price movements, that would then make those markets stable. They probably don't have that yet by designs because larger institutional players want to manipulate stuff. And like, there was obviously some big orders that went in the time leading up to the tweet. Some of the fund contacts I said those orders are from institutional side groups, so not at all surprised. Now, whether they knew something or didn't, that definitely needs to be investigated. If there's non-standard position size activity, even within the hour or hours leading up to something like that, that needs to be, go see who that was and get it investigated. Okay, so another thing, I've been working with a separate programmer that I work with a lot of times for out of, kind of out of the box type stuff. And I said, hey, I found some math and I like this cloud type setup, kind of a a look of a cloud that I came up with that I've never really seen maybe before. And I said, hey, can we play with this, put this math in it? And I'm always tinkering. I'm always trying to innovate, see what I can build. So he and I off to the side now, and we've been working on this for about, maybe a month and a half or two. Um, it's kind of like we kind of got it just we've been working on it a lot the last few days. and we've kind of got it dialed in. And I was just going to show you kind of in my mind when I start building something what the concept is. I have the cloud portion of the indicator. So on the buy side, the cloud would be, on the lower side of price. On sell signals, it would be rotating, and then on the higher side of the price, I'm going to leave that off for now because I want to adjust the graphics a bit, uh, as far as color shading, what color combinations I'm going to use. The main thing though is it is an indicator that has a signal and output. So the way it is now, and I'm going to show you at the end of the video how I'm going to adjust it. And the idea was to keep working on something that's what I call visually efficient. Like, you see something appear on your charts, you get an audible tone, and you see something that you could go in and configure, like you could change the verbiage or the lettering inside of the box. You could change, to a point, the size of the lettering, and then change all the coloring. So you can, make it colors that work for you. Maybe red outline box with some red shading for cells, or lime or green. I've just kind of used neutral coloring for now, just to kind of go over the concept. And then I have this arrow on here by design. When there's a buy, it's currently right about where the top of the Y is in buy would actually be the entry signal. And then on a sell, currently the way it's set up, it's at the base of the second L. So that's actually, hey, where, you got this big box in here. Where's the actual entry point? And I can do that with kind of a yellow horizontal hash line too. So I'll do that quick, just so you have some context as to, yeah, you got this box floating on price, but where was the actual entry, from a horizontal pricing standpoint, where was the actual entry? So right here, it would basically be right about there. So right on the top of the Y. And I'll show you some ideas I have for how the box could be set up to more pinpoint and have the box centered more on the exact actual entry price, or some examples. So this is just kind of food for thought. And again, when it comes to markets, I like to keep building stuff to see if I can capture, what are the possibilities with playing with different types of indicator looks, different types of mathematics. And the math just means what is reading the price action to then determine, as you adjust the settings, and this indicator has a lot of adjustability, where is upside momentum now at, where is downside momentum now at? And then I'll get into some of the signals. So let's pull up the settings quick. So there is adjustability in the indicator to make it more or less responsive with the period setting. There's a cloud span because this is a cloud-based indicator. I have the cloud shaded transparent right now, and you can precision adjust how wide the cloud is. And then there's some additional, more granular adjustability to fine tune how responsive and some of the behavior of the cloud in relation to price. So pretty much straightforward. And then the rest is just color shading on the actual cloud itself. And then the plots area also, what kind of letters do you want in the box, and all that kind of stuff. So I call it the dynamic trend cloud because it is a very dynamic indicator because of the type of math that was used in the cloud to drive the cloud as it reads price, and then also very dynamic in giving like 4 axis of adjustability. So, and then of course, the entry point or the signals are completely outputs. Now this one, I probably wouldn't do outputs on all aspects of the indicator. Maybe like the upper and the lower area of the cloud at a bar close, like where it is, the upper side of the cloud, the lower side, and then the signal, and that's it. That's more than enough for a trader to do whatever they want. Connecting this to third-party tools to then, drive automation. And I don't have any intentions uh, to, build an automated strategy. I'm kind of done building automated strategies. So what I have in the Algo IQ program is what we have. And then we're adding a tilt trader that the graphics, just last part of graphics I'm finishing up, because NT8's old, so I'm working with the graphics capability of NT8. And if I can get it good enough there, and I'm at the point where I'm ready to just say, okay, it's good enough. Let's put it in client ready version, put it in client's hands. So we have two more things for the Algo IQ program. We have the uh, tilt trader, which is very unique, and then we have the hybrid z-score. So those are getting added here in October, and then they'll be added across all three platforms on NT8 first, just because NT8 has the most limited graphics. So if we can get the graphics really good here, then we can have them really good on Quantower and TickBlaze. This is just something I've been working with on the side, but kind of want to get to the point. I never stop looking at new math, new ways to try to find visually efficient setups. And I probably put way too much money into building this. And then all of a sudden okay, now I see why I was working on this. We really got it figured out and dialed in now. And it's pretty darn accurate. So some of the mentalities of building this were when I get a signal, so in this case, the signal would be the L. I want to make sure I have a really high percentage of time, some movement of price in my intended direction. So whatever my stop would be, on average distance away from entry, that I can get that stop down to break even plus as fast as possible, putting you in a safe trade. So here's a trade, some positive movement out of the signal. Here's a trade, some positive movement out of the signal. Here's a trade, cycled a bit, some positive movement. Next one, some positive movement. This one, not so much in the beginning. It oscillated once. Very likely, if you had a tighter stop, you would have gotten stopped out. But then it finally gave some positive movement. So, no system is perfect. Here, uh, a little bit of cyclical action, definitely nothing that would take out any stop. Maybe half the distance from the most recent price pivot to the entry point. It's kind of what I'm thinking. Averaged out so that it will be a fixed amount of risk on every trade. That's optimal, but we got some positive movement. From the base of the L, positive movement. From the B, positive movement, and so on and so on. So that's what I always look for when I'm building something. Do I get positive movement on about 80% of the trades plus? And is price entry in relation to the most recent price pivot? Do I have a workable area to put a stop that's not too far away always in relation to the time or to the instrument I'm on in the time frame? On this one, I just happen to have it on Ninja now. I've been testing on all different candlestick types, and it works fine across many. So that's part of the overall system building. Now let's go forward. Here was the double top action. Do I have positive movement out of the trade? Yep. Then here was lift pre-market through the open. And remember, we had the double top and then the big sell-off. Did I get some positive movement? Yes. And then we definitely get selling out of the big sell as the China news, tariff news hit. And then we had a final buy, or we had a buy, got some positive movement. Sell got some positive movement. Buy, that would have been a stop out likely. And then a nice sell to wrap. And then one idea I had was make a sell box like this with the dot would be exactly where the closing bar price to trigger on a sell, and then buy with the dot up here box for buy. So the dot is right at the base of the candle. So some additional ideas for visually simplistic trading. If you have questions, info@gridalgo.com.